Hello and welcome to the market update for Tuesday, August the 24th. Well, over the last few trading days, we've seen some really good bullish signals in the market. The breadth has really been picking up. That's something we'll take a look at here. But so what does that mean? That means that there's been more participation. We're not just seeing a few stocks driving the rally, but it's been pretty broad. And that's good, and that's given me a reason to be a lot more optimistic over the next week. And what we need to start looking for then is do we start creeping into the overbought as the markets do start breaking out to new all-time highs. The S&P should close a new all-time high today. It was just barely under a new all-time high close yesterday. The NASDAQ 100 closed a new all-time high. We'll look at those charts here in just a second. The Dow is still back a little ways, and the Russell 2000 is back. Well, it's getting closer now. These last few days, it's really had the Russell's really been outperforming the market the last few days. So those are things I've been telling you to look for and keep an eye on. Those are good signals. The movement of the Russell 2000 is really making me pretty bullish. But then now we need to kind of see if we start creeping into these overbought conditions, and we're not there yet, but we'll keep an eye on that if this trend continues this week. As far as the direction alerts here, you can see momentum's getting pretty close to getting into that extreme range. It's on the right side of the buy range. It's the closest to getting into that extreme range. And these have moved pretty far from the last market update last week. So, we could get in, if the market just continues to keep moving higher this week, we might be reaching some of these extreme levels next Tuesday if that is the case. And if that does happen, we might have to start being a little more cautious and looking for a much bigger pullback that could start to take place at that time. But so we're not there yet, and we may not, who knows, we could get another little pullback along the way that would move these indicators back a little bit. But just the way things are setting up and the time of year things are setting up, there tends to, August and September tend to be the most bearish months of the year historically. September is usually the worst in many cases. And so as we're getting to the end of this month and into next month, if I were to try to picture a time of the year where I'd expect a bigger pullback to take place, followed by a nice extended rally afterwards, I mean, this would be ideal. You'd get the September sell-off followed by typically the most bullish months of the year as you go from October into the end of the year. So again, that the market never plays out the way I think it should, and my job isn't trying to predict what I think it's going to do. But as we've kind of bounced back and forth all summer, I've been waiting for the market to start charging into these extreme levels, overbought levels that would be that precursor to that sell-off. It's been prolonged. We've been waiting for it. Now it seems like it's starting to get that feeling that it's starting to happen here. So a lot of that's going to be based though on the breadth of the market. Does that continue to move higher? Right here, you can see the breadth is getting to the right side of the trending area, but it's not even in the high area yet. You'd want to see all three of these get into that extreme level. We don't necessarily have to have them go all the way to the right side of the extreme range, but we'd want to see them solidly in that extreme range. And what I'm talking about here is not that we'd expect to sell off immediately when that takes place, but we'd have to start looking for bearish reversal signals at that point. Do we start to see the day where the market gaps up higher and then sells off by the end of the day that could indicate that a reversal is starting to take place. So these are all things that I'll talk about and show you if they happen to take place or take place close to a Tuesday or Thursday when I do the updates, and we'll see if we can know when we're in danger that we need to start taking defensive measures. Sentiment is in the high range and midway in the high range, so it's not in that extreme range there either, so we're okay there. But all of these are very bullish. These are all showing me that there's still room to run. There's still room for the market to go higher. It's making me a little more confident to buy in these conditions. The buy-sell ratios, you see the buys are starting to outpace the sells. And again, this shows there's still room to run. We're not in one of these. This is a kind of an extreme bearish state right here, where the sells were outpacing the buys, and these ranges were pretty wide. This is a little bit more of a bullish extreme, where the buys were far outpacing the sells. But what we have here is we have what looks like we're moving towards that crossover. It could lead to the buys getting up here somewhere and the sells being down here, and then that's when you need to be an extreme on the buy-sell side. But like I said, all of this is pointing to an expectation the market should continue to rally from here. And when I say that, again, day to day, you're going to have flat days or down days along the way. You could even have a little bit of a mini sell-off like we saw last week. I think it was last week, where it pulled back real sharply and then came right back again. But this is all still looking like the trend is still pretty strong. Now, the buy-sell ratios of the entire market is it's not quite at 1 yet, but I think that will change with tonight's update. Remember, these things update overnight. With the bullish move today and the kind of the breadth that I'm seeing in the market today, I'd be pretty confident that'll flip to at least a 1 or very close to a 1 by tomorrow. And because our next class is not until Thursday, I am going to go ahead and there are some trades we're going to add to the portfolio today. We did get signals overnight. I actually got a signal on a stock, a buy signal last Friday. I went ahead and got into it because I knew I wouldn't have class till Tuesday, but I'll go over that with you. There's a couple of I think there's 3 of them that we'll be getting into today in the portfolio. And now, again, I don't want to. I've been doing this a long time, so and I've seen how the system updates overnight. So there's sometimes situations where I can anticipate that we'll get the confirmation. The reason why I'm pointing that out is I just don't want you to just assume that just because we're close enough to a 1.0 buy-sell ratio, let's just go ahead and do it. There is another signal that makes me believe that we're going to hit that 1.0 too. If you go into the indexes here, you can look at. Wait, hold on. Let me go back to this. We go into the indexes here. You can see the buy-sell ratios of the different indexes. And right now, they're all looking, all of them are above 1 except for the Russell 2000, which is just barely below 1. Remember, that buy-sell ratio indicator we were just looking at is for the entire market, so more than 2,000 stocks even. So, but the Russell 2000 is at a 0.92, and with the Russell outperforming the other indexes lately, I just think that that overnight that thing should hit, if not 1.0, but very close to it. And so, and with all the other indexes up above 1.0, and probably Russell will get there today when this updates overnight, I think we're in good shape to go ahead and buy. Now, what if we were selling off today and the markets were looking a little bit weaker and the breadth wasn't as strong, and we were just below that, going back to that, and we were just below 1.0 here on this. Well, then I might feel a little bit differently, and I would feel a little bit different. I'd be a little bit more cautious. I'd want to wait until I see that above 1.0 before I do anything. But with everything else I'm seeing, and I'm trying to look at everything, as many things I can to come to my conclusion, I think it's going to be okay to go ahead and get into those trades today. All right. Let's get into the charts here. and I want to try to get to, I want to be as thorough on this, but I want to get through as fast as I can because I don't want to go too far overtime today. And there's a lot of portfolio adjustments we got to make. And we're back to making money again on the portfolio, which is good. We had that little bit of a pullback that put us underneath or underwater a little bit. Here's the S&P 500. You can see yesterday we were just shy of closing at a new all-time high. We should do that today. Now, today has been a very compact trading day. The S&P had that gap up in the morning, and we really haven't gone anywhere since then, at least in the S&P. But that's okay. I mean, we've had 3 strong days. You'd expect to see some sort of a pause after a move like that. So I'm not too worried. That's it's been a nice strong 3 days off of that bottom right there. That we had that reversal day. Here was the sell-off. The sell-off started really right here. Really started to kick into gear right here, and then we gapped down the next day. That was Thursday. Then we had Friday's recovery, Monday, and then today. So that's still looking good. Again, pointing out though that we are getting into the extreme range, but we're not. There's still room to run to get all the way to the far right side, especially since the other indexes aren't quite there yet. Here's the Dow chart. Dow is still in the buy range here, but it's still a little ways away from its all-time high. Same thing today. It's kind of a compact trading day from the open. But that looks like it's working its way back to that all-time high. NASDAQ 100, this did reach a new all-time high yesterday. Again, kind of a compact day today. Now, we do have to keep an eye on this. It is getting into that extreme range. But keep in mind, it can stay in that extreme range and stay at the far right side of the extreme range for a little while. That's not an exact indicator that says, hey, we're gonna pull back from this immediately. But we do have to keep an eye on that. And if we stay in that far right side and we start to see the Dow get into that extreme range, and especially if the Russell starts to get in there, we have to start to be a little bit cautious. And even then, all that means is that we start looking for bearish reversal signals, keeping our eye out for it. Because usually you'll get some before you get a bigger drop. Usually there'll be some warnings and some clues that the market is getting concerned or getting overconfident. But it'll start showing up usually in the price action. So we'll keep an eye on that. All right. And then the Russell. And you can see the move the Russell has made over the last 3 days has been pretty incredible. And it's built on the gains. It isn't a real flat day today. It gapped up and it's been running. So we're getting that participation. It still has a ways to go to get to a new all-time high. But now what's happened here, real subtle, but it's one of the little clues I want you to look for when you're looking at charts. Now that we moved up pretty strongly, you can classify that as a higher low. The next thing you want to look for is, can we break out above here? This was a lower high right here. Do we end up getting a higher high? Does this continue to move higher? And do we see that move to a higher high? As far as the range here, I don't know that the Russell will necessarily reach a new all-time high before we get a bigger pullback. In fact, I would imagine that it would be a very strong indicator of a top or of a potential reversal if it gets close to getting to that new all-time high, but it ends up reversing. Because remember, the Russell tends to be a leading indicator of the entire market. And if you've got the Dow, the S&P, and the NASDAQ charging to new all-time highs, hitting that extreme reversal risk range, and then you get the Russell 2000 hitting the extreme reversal risk range, but underneath its new all-time high, I could easily see that would make a lot of sense for a sell-off to take place. And this would be that non-confirmation. It never confirmed the uptrend. It never it diverged. It started to diverge ahead of time, started to have that lower high before the other indexes did. So again, this is all stuff that will just play out over the next few weeks. We'll take a look at, and my outlook could change. We could have something happen tomorrow, and I could change my mind. So again, my job is not to be a psychic here or a predictor, but to be a forecaster and to make adjustments when necessary. But that's kind of what I'm going to be looking for there. All right, let's move on to, and you can also see, like the NASDAQ 100, which has been outperforming, is only up 0.21% today, just under 0.25% move higher, but you have the Russell that's up almost 0.75% today. So that's what I've been talking about for a number of weeks, is you start to see the Russell moving in a bigger percentage compared to the other indexes. That's a good bullish sign. And it's a good sign of market breadth. It means that more stocks are participating in the rally. All right, bonds. Last update, I talked about, this looking like this was an ABC correction, the bullish ABC pattern here, and that we could start to see bonds continue to move higher, that ABC pattern correcting this larger trend up. We have started to move up, but the last couple of days we've kind of pulled back a little bit. I still think we can use this high and this low as our key spots right here. If we break out above here, obviously that would confirm the uptrend in bonds. If we break down below here, that would indicate that we still could be in that trend reversal in bonds, where bonds start moving lower. Now, obviously, both of these points are a little ways away. Another area that you can look at is you had this little correction right in here, and so that would give you a higher low, higher high, and so this could be a key spot to the downside. If we break below that, it could increase, not in a big way, but increase the probability a little bit that it's moving back down towards this low, because it shouldn't do that. It should be higher highs, higher lows, and when it doesn't, you want to pay attention. It could mean that it's going to reverse back down. So these are going to be the key areas right here to look for. This is going to be a more subtle, smaller low to keep an eye on. As long as it doesn't break below that low and starts to move back up. Well, if it starts to move back up from here, it's really confirming it. You have higher low then. You already had the higher high. You'd look for it to break out above there. Let's move on to gold. Now, I talked about the looking at the big picture, the possibility that this could be a large bullish ABC pattern. In fact, let me go back to that longer term chart. We can see it a little bit clearer. I'm going to go out to like a 2-year chart here. I was looking at the possibility, here's a large uptrend, here's a larger correction of gold, and that maybe we're starting a new uptrend here where we kind of broke out above some of these levels, and that this was an ABC correction of that move. You might even look at it as gold forming a larger inverse head and shoulders pattern or something like that. But it looks to me like gold is starting to turn the corner and could start to rally. Now that can change. Obviously, if it fails to do that, it starts acting like a downtrend again. But so far, it's acting like an uptrend. We had this impulsive move down, impulsive move up. Anytime you see that's usually what happens at a bottom. Just like an impulsive move up followed by an impulsive move down often indicates a potential top. But then you had this little consolidation right here. So you had, if you're stair stepping up, we got impulsive, corrective, impulsive up, impulsive down. Usually indicates a potential trend reversal. That's usually confirmed by going corrective and then impulsive down, corrective. At a bottom, usually you see impulsive down, impulsive up. And one of the confirmations of a potential up trend reversal to the upside would be that you start to get that pattern repeat. Corrective should be followed by impulsive. We got impulsive. This is looking correct, or we got corrective. This is looking impulsive here, where it started to kind of take off again. We'll see if that plays out. So far, it is acting like this is a larger bullish ABC pattern, and we're going to work our way higher. Now, what would confirm that? What are the key areas to look for to confirm that? Well, obviously, here was this last drop right here. So that high and this low are going to be key spots. If we can break out above that, it's going to confirm that we're trending higher. It would confirm the near-term uptrend. If it comes all the way back down here, it would pretty much wipe out that entire longer-term analysis I just gave you, because this should be the bottom right here. It shouldn't go any lower than that. And if it does, I'd be very bearish on gold, but it has further to drop. Now, just like bonds, you could, because it had a little correction right into here, where it went to now a higher high. This is now a higher low. This could be a key area to keep an eye on too. If we suddenly reverse and dip down below that, that would concern me in the very near term. Not that it couldn't still rebound and go higher. These are still the key area, the high probability areas that we want to keep an eye on. But these are the real subtle moves that could tell us where the near-term movement of gold could go. So far, it's acting like it wants to go higher. We're going to assume it wants to go higher, and we'll update how that looks in next week's market update class and see how it's going from today's analysis. All right, oil. Kind of the same thing with oil. I'm only going to go to a 1-year chart on this. I was looking at this being a correction. This looks corrective, more choppy. This was clearly impulsive, where it was a sharp trend up. This was corrective. What I'm looking for is, does it look like a step? Does it look like a step within the stair step? And so far, this looks like a corrective move, which should mean that oil should go higher. And I get it. I know there's reasons to change that outlook. You know that as oil goes higher, that OPEC is going to pump more oil, and it's going to make it harder for oil to go higher. It's always been that way, though, but you know, it's had a nice. This is definitely impulsive down right here, and this looks impulsive up the last last 2 trading sessions, especially. That looks like a trend reversal. What do I look for this week? Well, do you have a little bit of a pause where it moves a little bit choppier sideways, or pulls back a little bit and then goes higher? Does it, get these smaller stair steps starting to take place? But from what I'm seeing, especially with that impulsive down, impulsive up move, is that I'm assuming that oil is going to continue to trend higher here until I see different. All right, the dollar. Now, last week we were talking about the dollar being right up here. We talked about this being kind of the critical. I think we're still talking about this being kind of the critical. These areas being the critical breakout areas, with this one being important as well, because it was, it was very. This was a higher low right here. Well, obviously, we broke it out higher, and then we come back down sharply. So what I'm seeing is a potentially impulsive up, impulsive down. So I think we're in a spot here that we could start seeing a trend reversal in the dollar. What's the new kind of key areas? Obviously, up here is going to be key. If it breaks above that, it would continue to be bullish on the dollar. If it breaks below here, though, this now is going to be significant. Because it broke out, this now becomes a significant low right here, that higher low, because you've had higher high, higher low. If we continue to drop and break below here, now you've got a lower low for the first time. And you've got that impulsive move up, impulsive move down, which is what you typically see at a trend reversal. Stop back here. Impulsive up, impulsive down. Okay. Now, we did see it back here as well. This is impulsive up. This looked a little impulsive down. And actually, this looked like it was corrective. I thought it was going to go lower here. It didn't. So, again, these things can change, and we got to be flexible enough to change as it moves. But what I'd be looking for this week is, does it break below this low, obviously, or does it start to rally and give us a higher low right here and start moving towards this upper range? If it does, then maybe the dollar could continue to move higher. Now, typically, like I've mentioned many times, commodities and the dollar tend to move inversely or in the opposite direction. Last week, it didn't make a lot of sense because oil and gold looked like they were going to go higher. I talked about that, but the dollar was also moving, looking like it was going to break out and go higher. There are times where it does move in the same direction, but with the big move in oil and gold up over the last couple of trading sessions and the big drop in the dollar over the last couple of trading sessions, that makes a little bit more sense from that inverse standpoint. This is a tricky one. You don't want to always assume it's going to move inversely, but typically it does. So that's why I would tend to lean more towards the dollar. If gold and oil continue to move higher, I would tend to lean more towards the dollar continuing to move lower and take out this low right here. We'll see if that happens, and we'll definitely look at it next week. All right, the VIX then came right back down. We were concerned it was rising there with that sell-off, but it's come back down. So there's not a lot of concern that of a sell-off here. Dow, if we do go lower, if we go to a lower low on the VIX and we start seeing the markets reaching new all-time highs and complacency really setting in, that would be a little bit of a concern that the market is too complacent. It's not worried about a sell-off, and that's a lot of times when they tend to happen. But again, where it is right now, it's just confirming the uptrend of the market. Remember, the VIX is not going to show you something every day. It's not going to. Usually, it's going to move inversely to the market, and that's what it's doing here. The market's up, the VIX is down. We want to look for when it moves in the same direction, or if it moves in a larger percentage than the market, those things. Anything that would signal concern or complacency or confidence. And all right, semiconductors. Obviously, the NASDAQ one, we want to compare this to the NASDAQ 100. It's been breaking out. Although the semiconductors, you have the NASDAQ 100 hitting new all-time highs. Semiconductors have lagged a little bit. But they've had a strong move the last three days, and again, a higher low right there. What we want to look for is does it continue to work its way back up and confirm the NASDAQ 100 going to a new all-time high. If this goes up a little bit further, we see the market start showing some weakness, and it doesn't look like it's going to go to a new all-time high. That's a non-confirmation. That'd be the same thing with the Russell that we're looking at. If the Russell doesn't get to new all-time high, could it be a signal that a bigger correction could be underway? Transportation stocks, you want to compare that to the Dow Industrials, the DIA. We did put in a higher low. It did pull back a little bit with the market pullback, but it did put in a higher low. We've got kind of an even high right here. I'd want to see, do we start to see that the transportation stocks break out and go to a higher high? Show that this downtrend in the transports is possibly over. But you can see this is well off its all-time high. This is really lining up that we're going to get a lot of this non-confirmation. The markets the index are going to break out higher, but some of these real subtle things that could indicate trend reversal could be warning us that bigger sell-off could be coming. So we'll keep an eye on all that. But as of right now, it looks like the transports are confirming the recent rally as well. Bitcoin, I've thrown this one in there, just keep an eye on it, but it's been trending up, higher highs, higher lows. I'm using Grayscale GBTC to kind of just because it tends to move with the chart of Bitcoin, and it's a tradable stock. So if you want to trade Bitcoin without actually buying Bitcoin, but trading a company related to that will move with Bitcoin, kind of a proxy type trade. This is what you could do here. But this is there's a higher high right here, and today had an intraday low that came down here. But this looks like a little bit of a hammer candlestick formation forming here. We'll see if that leads to a move higher. Usually you like to see that hammer though after a drop. So if it would have had a drop like this and then have that hammer formation, that would have been a lot more bullish. When you see kind of a hammer type look close to a top, that's not always a good thing. So we'll keep an eye on that, see if maybe Bitcoin has a little bit of a bigger pullback here. But we'll see. We'll see how that turns out. All right. That wraps up the market update portion. Let's do the portfolio management first, and then I'll look at some stocks we can add to our watch list. As you can see, if we go into my portfolio here and go to our stock specific class, we are up $1,500, almost $1,600. Remember, we were down last week, about the same. I think it was about $1,500 we were down with the market sell off. So it's good that we're rebounding here. But again, I like this because it shows you that portfolio is going to fluctuate. There's a question here. Hold on. Question on DAC. I think that's I can't give specific advice as to what you can do with your trade. Just keep that in mind. I'm not a financial planner, so I'm not licensed, so I can't tell you specifically what to do. That's why with the portfolio, the way I'm doing the portfolio is I'm just telling you what I'm doing and how I'm doing it and how I'm making my decisions. So I'm coaching. I'm not advising. So I can look at DAC as far as how I read the chart. I can do that here real quick. Your question was from an Elliott wave standpoint. There's not a real clear. All I can see right here is we were consolidating here and we've come way up to here. There's not real clear waves in here. There's a lot of, there are some pullbacks in this area right here. This usually when you see this big of a move up, I use it since wave 3 on an Elliott wave pattern tends to be the most impulsive wave or the biggest wave, the strongest growth. I would assume this was a wave 3. This larger correction was a wave 4. We're probably in a wave 5. That's usually how I'd handle something like that. Is it possible that this was just wave 1 and this is a massive move higher? Yeah, it's definitely possible, but I would assume that that's probably wave 3, wave 4, and we're in wave 5. And then you would just manage that accordingly. If this is kind of that final wave, you could use a trailing stop or just keep moving up your stop below different corrections. But that's about as far as I can go. I can't tell you specifically how to manage that trade as far as your stops and things like that. Hopefully you can understand that. All right, let's get into my portfolio here. Now we're up almost $1,700, so things are really ripping for us here. But I like that we come back and forth just because you can see how trading is. It's not going to go straight up, and that's why we didn't panic when we were down. We looked at the charts last week, and the charts still looked okay. There wasn't a reason to get out of. Although we did end up selling one that we ended up getting, it did hit our stop. We got out of it. But I am going to make some stop adjustments on these. PFMT right here. Let's take a look at that one. We have our stop down. We had our stop down below here. I'm going to go ahead and move it up below here. Now, on some of these, we've gotten to move higher where this could be a higher low, and I'm going to decide not to adjust the stop. Usually I'll make that decision if it looks like we've retraced about half of that pullback. That's kind of where I'll make a judgment call here. I think we're close enough, and I like the movements over the last few days. There's some strong moves there to go ahead and adjust my stop up to here. The fact that we almost broke out here, we pull back, and it's looking like we're putting in a higher low. I think this will probably be a low that we can use. So I'm going to adjust that stop up to, and not only that, but the market conditions. I've already looked at the market conditions. They look pretty bullish in the near term. So I'm fairly confident that the path of least resistance right now is up. And if not, then I'll probably be happy to stop out right here, because it would definitely be worrisome if we don't move higher here. So I'm going to go ahead and adjust this to 360, which is just going to be below that low. So let's go back to the portfolio here. We're going to come all the way over to stop price. We had it at 3. We're going to adjust it to 360. And click save. Now RM, I'm not going to adjust it. Okay. We're getting close to that 50% area here. I don't like the way, it's trading day. It's down a little bit. Those couple days that's pretty good. But I can still see here where this could be wave A, wave B, and you get a wave C that comes down into this area here. Our stop, I think, is down below here. I could still see where we could have wave C and then take up higher here. So, and again, this is kind of me making a judgment call. Like I said, when it's near that 50% area, I'll sometimes have to just kind of make a judgment call. If we get another decent up day, if we get another up day at all, and we might have this by Thursday, I could see myself adjusting it up to that previous low right there. So we may make an adjustment on this on Thursday, but for now, I think I'm going to wait on that one. MSTR, I'm not going to adjust this one. We already have it. I think we already have it below this low right here. I don't like the down move today. It could come down and trigger that. So I'm going to just go ahead and hold that one there. Mara, our stop is at 26. Now that's down in here. Now we did have this move high, and we did break out. Anytime you break out high, I definitely want to move the stop back below the previous low right there, because you have higher high. This is now definitely a higher low. So I'm going to adjust the stop on this one to just below this low right here, which is going to be probably right at about $30. Let's go ahead and just make it a round number, put it at 30. Now I'm going kind of fast here. I get that, but remember, this is being recorded. You can always go back and review it if you need to spend a little bit more time seeing this. So we had it at 26. I'm going to adjust it to 30 and click save. Yeah, there's a question about Elliott Wave. I love Elliott Wave. And by the way, there's trainings on Elliott Wave. If you go to YouTube and you pull up the training videos I've done over the last year, I've got some Elliott Wave classes here. I love the way I apply Elliott Wave. I'm not saying that in a cocky way, but it's realistic. Don't become an Elliott Wave fanatic where you believe that every chart is going to follow Elliott Wave analysis perfectly. It doesn't. I've been doing this for 20 years. You have to just kind of apply the concepts. You do need to focus on the rules too, when you see clear waves, the rules are important. But I like to compare it with everything else as well. Compare it with the overall trend. Compare it with your trade management, your money management. Don't assume that it's going to fit perfectly into how it's drawn up. And that's what I did with that chart. Was I know that wave 3 tends to be the biggest wave. That's what I was seeing there. That was the most explosive move. It had a deeper pullback, and then went higher again. I'm assuming that's wave 4 and wave 5. And then now it's just a matter of just manage that. And just don't expect that any analysis can tell you exactly what's going to happen. I think that's the mistake that everyone makes with software, with gurus, with analysis, is that something's going to tell them exactly what's going to happen, and nothing will. And nothing ever will. I don't care what kind of smart computer is being developed. There's too many variables. All right, let's take a look at ASPN here. Let me go back. Where's our stop on ASPN? Stop is at 30. Okay, so this one's gone higher. So our stop was down here. We broke it out higher. So I do. Now remember, I've been holding off on this one too, but now I'm going to adjust it down below that low, which is at about 33.50. Some of this I did ahead of time. And all I did here was just look at what the low of that day was. We can do it here. What was the low of that day? That was 33.70, and then I just dropped it a little bit. We just went to 33.50. Could I have done 33.55 or 33.40 or 33? Yeah, I mean, I don't really care. I just want to have it a little bit. I don't want to have it exactly below it in most cases. I want to give a little bit of wiggle room, but usually I'll pick a round number. Some people don't like to pick round numbers, like to pick odd numbers to, but there's no, don't make it more complicated than it needs to be. We'll just adjust that to 33.50. ASPN 33.50. Click save. Riot, I'm not going to make a stop adjustment on that one yet. I think our stop, let me double check on that one. Where was our stop on that one? Stop was at $30. So we already have it. We already have it right below here. I don't want to move it. There was no place to move it to just yet. So we have our stop down below here. We're good. STKS, the stop is at $9, which was down below here. I'm going to go ahead and move it up to here. Again, we're a little bit past halfway, but I like the way it's traded the last few days. Definitely impulsive down, impulsive up, looking like that right there. Now this is where it can get. This is where, again, you can't just go off of them. Impulsive up, impulsive down, and vice versa. It isn't always going to work neatly. This was impulsive up, impulsive down, then impulsive up. That looks like a lot of indecision there, but we did again go to a higher low right here. So I'm going to go ahead and move that stop up just below here, which is at $9.55. $9.55. Yeah, there's a question. Can you show the trading history? Here's the trading history real quick, and I'll just put it on there for, you can freeze it when you review the recording and look at all the numbers there. I just can't keep it on there for you to write down on that. Obviously, I think you understand that. But all right, let's go to Tesla. Our stop on Tesla. Oops, let me go back to current holdings here. Tesla, our stop is at 615. I'm going to move that one up to just below here. Here's 615 down here. We're going to move it up to 645. DDS, our stop was at 160. We're close to breaking out here, so I'm going to move it up to here to 185. So we're going to go from down here to up here. Actually, 185 is down here. I'm going to leave a little bit of room because it's possible still that this could come back down to this breakout area and then go back up. So I think I moved it down a little bit, for not right below here, but down a little bit further to about 185. Gives a little bit more wiggle room there. It's up $15 from where we had it before, so that's a good sign there. And we're just $4 or so from where we got in, so we're almost at break even on that with our stop, which is always a good thing. All right, and Mosey was the one I added Friday because it hit the buy signal. And you know what? On Thursday, I had said I didn't like the way things were looking, and I didn't want to add anything. But Friday, we had a really good market breadth day. We had a bullish reversal on the indexes, and then this chart looked good when it got the buy signal. I had my stop at $4, so let's look at the chart here. So I got the email alert. This was Thursday. So it had gone to the buy signal Thursday. Remember, it updates overnight. So I got the alert that it went to a buy signal, and then I got in on Friday here. But I liked that this had that big pullback, and then it was starting to, now as it was starting to move higher, it looked like that potentially could be a higher low, and now it's gone to a higher high. So when I first got in, so I got in on Friday here, I had my stop down below here. And now, since we've broken out to a higher high here, I'm going to move the stop up into here, which was about 490. Actually, I put below this low right here. I found the lowest price during this little pullback, which was right down here, and I put the stop just below that. So let's adjust that to 490. Now I'm going to try as best I can to get into new trades and add the ones I want to add during the classes, but there are going to be a few of these where we already have them in the watch list. I get the alert, and it's in this case it was going to be a couple days before we had the update, and so I went ahead and got in. Now, let's go to our watch list here real quick. because I got a couple signals last night, email signals here. I'm going to get into CAN. So I got the alert on CAN. We already had the Mosey one. I'm going to go ahead and delete that one out of the watch list. We got a signal on OPRX and NTLA. You can see here that I already got the email alerts on those because now the boxes are no longer checked. Let's go ahead and delete Mosey because I'm already in that one. Let's look at entering CAN. Let's check the chart here. I like it looks like the higher low right here. But I'm gonna get in, but I'm gonna put my stop down below here. And I'm gonna put my stop, so I'm gonna look at what this low was over here. $5.32. I'm gonna just make that $5.30 the stop. So let's add this one to portfolio. So you're going to click on this little blue button right here. I want to add it to the stock specific portfolio. My stop is going to be at $5.30. What if I did 500 shares? What would that be? Yeah, a little bit too high. Remember, we want this to be between 1% to 1.5%. So I'm going to lower the shares there. Let's go to 300. There we go. There we are. A little over 1% portfolio at risk. Again, if I get stopped out, I'd lose $1,100. You got to be willing to. You got to remember, not just looking at the percentages. You got to be willing to risk the dollar amount too. If that's too high for you, you got to buy fewer shares. Get that risk, get that amount down to what you can handle. So maybe you're like, man, 500 would be the most I could handle if I get stopped out. Okay, well then drop that down to. Does 100 shares look like $375? Okay, if you can handle that as your loss, then that's what you should do. You should make sure you're always willing to risk the amount that you could lose if you're wrong. And it could be more than that if it gaps down. Obviously, gaps could make it. You're not always guaranteed to get stopped out at that price, but you can't control that. So control what you can control, manage what you can manage. All right, so purchase and go to my portfolio. And there's that one. Let's go to the next one here. OPRX. Now this has had a big move today. This is where if you're watching these, and you see that it's going to close at a buy signal, you could have possibly gotten in yesterday. And I did see this, but I wanted to wait for the class to do this. But it still looks like it's working its way to a new high. We can put our stop right down below here. So if I put my mouse over that day, the low of that day was $55.57. I'm just going to make the stop at $55.55. So let's add to portfolio over here. Stock specific class. Stop is going to be at $55.55. Let's see what 100 shares looks like. Oops. Ooh, real close. So we could do 100 and what does 150 look like? Yeah, let's get, so let's do 150 shares. Purchase and go to my portfolio. And the last one, NTLA. I like it when it does this, when you get the buy signal and then it has a little bit of a pause day or a small day the next day, because that way you're still getting in pretty close to when you got the alerts. You know, you don't feel like you missed out on a big move. But we're assuming this is kind of a cup pattern with a little bit of a pullback right here. Assuming this is going to break out higher, I'm gonna put the stop down below here though. Initially, I don't like to have the stop too high at first or too close at first. Give it a little bit of room to get going, and this could move up in the next few days and get close to this breakout area. I'll immediately move it up to that low. We may do that on Thursday if we have a big enough move between now and Thursday. But I'm going to start it off down below here. So I just looked at this. This was the low day. This is the low day. There's where most of it was, but I'm going to pick the low day. We'll get it right below that low. Initially, like I said, we should be adjusting this pretty quick, but the low that day was 125.68. I'm going to put it in at just 125 to stop. So let's add to portfolio. Stop price at 125. So I need to put which portfolio we're putting it in. Let's see what 100 shares looks like. Oops. Ooh, that's too high. So we got to go 50 shares. What does that look like? That's still a little bit high. So let's do 30 shares. That's a little bit too low. 40 shares. That works. 40 shares. All right. Purchase and go to my portfolio. All right. Now we go back to the watch list and boot out all those stocks we just got in. CAN. Just click the red X button. OPRX and NTLA. And while we're here, we can quickly go through the stocks that we're in, or that we're watching here. We've been watching this one for a little while, but it's starting to move up again as ZDGE. I said if it goes any lower, well, it actually did, I think, go lower from last, but we'll watch it. It's starting to move back up again. We'll keep an eye on it. It may come back into favor for us. Actually, let's put this so we can scroll through our watch list here. So I'll do my watch list and then stock specific class. That way you can just click these little arrows and go through our charts here. Volt, you know what? Let's boot this one out. It went lower. It's been going down with the market going higher. We can come back to this later if it shows up in the scans, but I'm going to boot that one out. I'll do it here in a second, but let's go through the rest of the charts. GILL still looks okay. It's kind of holding this support area so far. See if it can work its way back to this breakout area up here. AVWN. Hold on just a second here. Excuse me, AVNW. This is going to a buy signal today. This should give us the email alert overnight. You know, I'm going to go ahead and get in this one because, like I said, I like the conditions. Let's see, where would I put my stop? I don't want to have it all the way down here. Let's get it below this low, but let's get it down a little bit lower. I'm just going to eyeball this at 33. 50. Actually, let's just do 34. 34 down around here. Because this is close to getting back up here to break out where we would move it right up to here, up to there. So this might be just temporary. All right, so let's do that. Let's go ahead and add this one. Let's see what 250 looks like. Yeah, let's get 250 shares. Let's do that. All right, purchase. Okay, we only have 25,000 here, so hopefully we get a good run and we can start getting out of some of these trades, cashing out of some of these where we can then add new ones. That's a pretty big portfolio right now. So now real quickly here, see if we can add anything to the watch list. Well, actually, let me go back to the watch list because we were going to boot out this Bolt. And I'm going to go ahead and boot out AV and NW because we just got in that one. BTVT, I don't like that it's down the last couple of days. The market's going up and this one's going down, but I'll hold that for a little bit longer. And then BioNTech, BNTX, yeah, I'll continue to hold that one. All right, let's see. I'm going to, since we did all the market analysis in this class, that's why it's the market update class. I want to save finding new trades for the stock specific class on Thursday. So we'll spend a lot more time on going through our sectors here, but there's one that we could add. We had it in our watch list before. It's under retail, but this KRUS. Remember, I booted it out because it was drifting down, but it was just kind of kept going lower, and it was breaking below this area right here. But then look at the nice 2 strong days right here. So this still looks corrective. This still looks impulsive. This still, even though it dipped a little bit below that breakout area, it seems like it held that area, and then now it's going up. So I'm going to go ahead and put this back in the watch list. So to do that, you're going to click on this little green button right here. Tell it what watch list you want to put it in. I'm going to put it in the stock specific class watch list. Click save and go to watch list because we need to put in our email alert. To put in the email alert, you're going to check this box right here. And it's going to email us when the alert goes from hold to buy. So just click on save right there. There we go. So hopefully we can add more into our watch list here on Thursday. I believe we will, because if the market continues to rally, there should be a lot of stocks to add. So, all right, I think that does it. Again, hopefully this is helpful. I know that some of you might tune out. We start getting into kind of the portfolio. We've been doing portfolio management as part of the training now for the last couple of weeks. I still want to continue to do that because this is where we put it all together. All the stuff I've been training you on for the last year or last 8 months or so. Maybe it's been over 8 months now. We're putting it all together now, both in our stock analysis, and then now how to manage the trade, how to manage the portfolio using all that knowledge, and hopefully we continue to see the portfolio grow, and you can see how you can at least see the potential there if you if you follow this stuff, and I'd love that we get a correction coming up that not only could we learn from recognizing a correction and when a correction could be happening, but also after it happens, that's the best time to start getting in and ride the trend back up again. So hopefully you can get a lot out of these updates, and they're helpful to you. And I'm always welcoming feedback on it too. If it's helping out and working for you, great. If it's boring you, let me know, because then I can look for some other things to go over as well. All right, thanks everyone. Have a great week. We'll see you Thursday. Bye now.